Okay, my name is Tony Okpanachi. I'm the CEO of Development Bank of Nigeria. I want to thank you very much for joining us at this session to share with you the DBN story. So we'll start with a short clip on a video. So I crave your indulgence, so please watch a short video. Please, can we have the video on? Thank you.
Bank of Nigeria, DBN, was conceived by the federal government of Nigeria in collaboration with the World Bank, African Development Bank, German Development Bank, KfW, French Agency for Development, and European Investment Bank to address the major financing challenges facing micro, small, and medium-scale enterprises, MSMEs, in Nigeria. Development Bank of Nigeria provides sustainable financing through eligible participating financial institutions, PFIs, who will in turn lend to end borrowers, micro, small, and medium enterprises, MSMEs. The DBN model is designed as a simple and easy to access on-lending model, which allows for scale and broader reach, working through participative financial institutions, PFIs.
The idea is that since the existing development finance institutions in this country were not doing well enough to fill that gap, it was felt that it was necessary to establish a new development bank, which right from the outset is constructed in such a way as to avoid some of the difficulties and pitfalls experienced by DFIs globally and in Nigeria, so that it can now succeed in promoting the objective of rapid employment in the country, as well as promoting and encouraging growth and local domestic value addition. It was in that context that the Development Bank of Nigeria was set up to help through lending and through leveraging with other finance institutions in the country to try to help fill the financing gap and get the SMEs going again as instruments.
I'm really proud that we could support the founding of DBN and support now the business of DBN, since DBN is really relevant for supporting Nigerian small and medium-sized businesses. Our main business is supporting small and medium-sized enterprises in the German economy. DBN does this not on a direct lending basis, but using partner banks, commercial banks. And it's the same business model we as KfW do have here in Germany. We have positive experiences with that, and as far as I can see, the same holds true for DBN in Nigeria.
My name is Tony Okpanachi. I'm the Managing Director, CEO of the Development Bank of Nigeria. Around the world, and indeed in Nigeria, MSMEs have been consistent in delivering their promise of being the springboard for growth, development, and job creation. Yet, there's a critical funding shortfall plaguing the MSME ecosystem in Nigeria. Since the inception of the Development Bank of Nigeria, our role has been to bridge the financing gap by unlocking long-term finance for unserved and underserved MSME segments in Nigeria, particularly among women, youth, green-focused businesses, startups, and economically disadvantaged regions, while also mobilizing finance from the private sector to strengthen the contribution of MSME to the overall growth story of the Nigerian economy. However, to enable DBN fulfill this critical mandate of financing the sustainable growth of the Nigerian economy, the need to crowd in funding from global impact investors has become imperative for us. With debt and equity funding from global investors, DBN will be better financially equipped to cater to the financing needs of unserved and underserved market segment in Nigeria. DBN will also be able to mobilize financing for Nigeria's economic diversification, which for us means unlocking new funding of $1.2 billion to 1.2 million MSMEs in the next 3 years, that is by 2025. And this will be covering women, youth, green projects, and startups to significantly improve the contribution of businesses in the non-oil sector to national GDP. Against this backdrop, growing the bank's balance sheet is now a critical consideration if the bank must achieve these ambitious aspirations for Nigerian MSMEs and the growth of Nigerian economy.
In the last 5 years, Development Bank of Nigeria has made significant strides in creating access to finance for small businesses in Nigeria, in line with the vision of the development partners, which includes several multilateral agencies and international financial institutions. By so doing, the bank has sustained the interest of existing investors and attracted the attention of several impact investors. Consequently, DBN considers AFSIC a unique opportunity to engage these and other aligned segments of the global investment community to partner in the next phase of DBN's growth by unlocking new funding opportunities. This will deepen DBN's impact in promoting socio-economic development in Africa's most populous country. AFSIC is the largest Africa investment event taking place outside Africa and an important channel of investment into the African continent, and therefore the right platform to engage with investors having Africa-specific focus and also experience in investing in Africa. We are the Development Bank of Nigeria, and we look forward to a rewarding engagement and new partnerships at AFSIC 2022, Investing in Africa.
Development Bank of Nigeria, financing sustainable growth.
Okay. So that's just a quick break, but I'll take you through a quick presentation just to throw more light on some of the things with. So about Nigeria, I'm sure we've heard a lot about Nigeria since morning, but just from the DBN perspective, if you look at some of the indicators shown there, one of the key things that's very interesting to us is in Nigeria, we have over 41.5 million MSMEs, all right? And that's a huge opportunity for a bank like DBN that's focused on micro, small, and medium enterprises. So a quick overview of who we are. DBN, we incorporated in 2014, got licensed in March 2017, and commenced our lending activities in November 2017. So we are 5 years as a bank operating. We have three core mandates. One, on wholesale lending. The second one, it's providing partial credit guarantee, which we do through our subsidiary. And then the third one is providing technical assistance. Again, we're wholesale DFI, so all our activities, interventions are through participating financial institutions. So, and this is, we underscore this with our strategic pillars, again, which we acronym READY, and that's looking at reach and exploring new channels up to making impact, which, again, underscored by our sustainability pillars, the octagon, again, looking at from the governance perspective, management, technology, business models, operations, products, stakeholder relations, and ultimately, human capital development for an institution. Who are our partners? We have partners across the board. First, our development partners, as I can see, the World Bank, the likes of KfW of Germany, AFD of France, the European Investment Bank, African Development Bank, MOFI, which is the federal government of Nigeria, and the Nigerian Sovereign Investment Authority. Of course, we are regulated by the Central Bank of Nigeria, the Securities and Exchange Commission, and we also have partners across for us in the SME sector. We belong to the Monterey Group, the Global SME Finance Group, and so on and so forth. And in our capacity building, we partner with several other reputable organizations, the likes of GIC and so on, to provide capacity building. So, what have we done in the last 5 years? Just to share with you. But before then, I would like to share with you what our funding structure is. In terms of funding structure, we have equity shareholders of the EIB, as I mentioned, AFDB, NSIA, and MOFI. And in terms of debt, provided by the World Bank, the AFD, KFW, AFDB, and ADF, which is also more like a subsidiary of the AFDB. So in the last 5 years, looking at what DBN has done, so far, DBN has disbursed over $1.4 billion, and this has impacted over 208,000 MSMEs through the participating financial institutions we have dealt with. Out of that, about 66% of such businesses are owned by women, and 27% of such businesses are owned by youth-owned businesses. Our subsidiary, which is the Impact Credit Guarantee, has guaranteed over $253 million loans to PFIs, and they've just been in operation for about 2.5 years. DBN is now a reference institution for most DFIs as a model DFI in Africa, and we've got a lot of DFIs coming to DBN to understudy what DBN is doing in terms of and it's been rated as one of the best run DFIs across. Externally, with our local rating, we have AAA rating from the GCR and Augusto. And of course, in terms of sustainability, we attained the highest level of sustainability by SSCI. And we'll continue to have more new partnerships. So in terms of technical assistance, what are the impacts? Some of the things we've seen. We've done technical assistance for about 5 PFIs, majorly commercial banks. We are on course to do around 15 PFIs. Out of that, some of the things we find out the financial institutions have reported increase in their loan, some of them up to 87% in terms of their loan, additional loans they provided since DBN did the technical assistance for them. And on the capacity building side, this time around, impacting directly to the MSMEs, we've done over 1,500 training for MSMEs. We developed an app to enable them also learn how to run their businesses and how to prepare themselves to access funding from the PFIs that we work with. We're quite strong on our green and sustainability agenda, so we position the bank as a leader in that area. And internally, we use what the acronym PREG, which forms the programs and engagements. And on the external side, from the green funding to risk management to affiliations and so on and so forth, to ensure that we position the institution as a leader in sustainability and green funding, and that is in terms of our agenda. So, what's our medium-term outlook? First, we want to scale up our capacity building. As I mentioned before, we are trying to add more PFIs, and this time around going to microfinance banks. We are pursuing our green agenda. Again, we want to consolidate on our leadership. We want to crowd in more funds. We know we act as catalysts to crowd in more funds from the private sector to lend to micro, small, and medium enterprises. And then, of course, in terms of accreditation affiliations, we continue to do that. And then, of course, expand our channels to be able to reach out more to the micro, small, and medium enterprises. The opportunity there is quite huge. Let me invite Ijoma, our CFO, to talk briefly about the financial performance of the institution today. Then I'll come back to finalize. Ijoma.
Thank you. Good afternoon, everyone. Okay, this points to the balance sheet that we have over the last 5 years. This is in dollars. You can see consistent growth on our total assets as well as on our loan portfolio. So currently having made out loans of over $1 billion with a very good asset quality, so 0 non-performing loans recorded to date. And in terms of profitability, consistent returns in terms of profitability, even through COVID, looking at our gross earnings and our profit after tax and profit before tax. So consistent earnings through the 5 years that we've been in operations. So point strongly to financial sustainability and the success of the business model that DBN operates in. Looking at our impact story, we dimension it in 3 lenses. So we have the numbers. So this is where we look at what's the volume of the loans that we have out there, number of SMEs reached, number of jobs created. Those are kind of things that we track. We also have in terms of value. We also look at quality targets as well. We have a very strong M&E framework, which also the development partners demand and are very happy to see. And we put all that together to ensure that we are speaking to the profitability, but also to the impact story very strongly. And we have KPIs that we monitor on an ongoing basis to ensure that we also give those impact returns to our stakeholders. So I'll hand it back over to Tony.
Thank you, Joma. I felt we needed a break from my monotonous tone. I'm sure it was refreshing to hear Joma speak, right? Okay, so moving on from there, just to share with you an idea of the board, made up of distinguished gentlemen and ladies, who have made their marks in different fields of endeavor. Our board is made up of predominantly independent directors who are competitively sourced across, led by our chairman, who's former executive director at African Development Bank, and all other directors, predominantly independent, non-executive directors. So to underscore the governance of the institution. In terms of management, of course, you've heard from myself and Ijoma. We also hear Bona is here with us, our Chief Operating Officer, and some other gentlemen, again, who have vast experience in the financial service industry. Good. You've heard us. Why are we here? I'm sure the question is, yes, you said all these things. Why are we here? Why did you come to AFSEC? And the first thing, just to let you know, I think for us, we've been in operation for 5 years. So the next stage for us is how do we also, going forward, the next 3 years, we think there will be need for about $1.2 billion in terms of the new loans we want to use to catalyze more funding from private sector. So we're here at the initial stage to see if we could raise about $400 million in terms of new, listen, our 3 years plan is to raise about $1.2 billion, and again, to be able to get, as I'd mentioned before, the needs for the micro, small, and medium enterprises in terms of access to credit is quite huge. And even with $1.2 billion, we'll not be scratching the surface, but what we'll be doing, we'll be acting as catalysts to crowd in more funding for the financial institutions that we'll partner with so that they can provide access to credit in that area. So that's the target we have here. And our focus investors, we're looking at impact investors, development partners, who normally will provide more patient capital, more interested in impact that their investment will be making. So that's the kind of investors we are looking at. I would like to close by saying the opportunities are huge. I know there are challenges in Nigeria, but I can tell you that it's to turn those challenges to opportunities, and that's what DBN is positioned to do. So we pitch for you and call on interested investors to take this opportunity for an institution that's started on a very good note with very huge potential, and the future looks very bright in spite of the challenging time we're facing currently. But things will look well. Thank you very much for listening. So I think we still have some few minutes, so we can take questions. I rushed that so that we can have further conversations. If there are questions, we're here, Ijoma and I are here to take any questions or comments from you, the wonderful ones. Please.
I run an SME in Nigeria and looking for investment. So that would be with one of your partners. Do you then also, since you're in development bank, offer with your partners interesting interest rates? Because that is quite killing, trying to get, you know, like a debt investment in Nigeria.
Okay, for us, for example, our pricing is market conforming, right? So we are not an intervention fund that will provide subsidized lending. So what we provide, and we don't also provide caps for financial institutions. They own lend at their own because they take the credit risk. But what we also provide, which is one of the things, we also provide tenor elongation. And one of the things we look at, if you know in Nigeria, most financial institutions, most commercial banks, they lend short term. But DBN will provide long tenor funding. We will lend up to 10 years in some cases, providing adequate moratorium to give small businesses opportunity to be able to stabilize their business before they begin to repay. But issues around the macro really does not affect the pricing as the case may be. So we don't cap interest or anything. So we don't subsidize interest rate, but more of market conforming for our own financial sustainability. Yes, please.
Hello, sorry to sort of repeat a question from an earlier panel, but we've invested in a business in Nigeria which has grown to the sort of billion turnover or so a year scale, and we're looking now at next rounds of investment. What we see is a market where there is a lot of interest in the smaller scale investing, in seed, pre-seed funding, in small ticket items. But where's the market for, I'd say, $1 to $5 million funding? Is that an area that you support?
Okay. No.
Because you can start a business in Nigeria, but it seems to be quite hard to grow one.
Yeah. No, I think for that, the most commercial banks look at such big ticket transactions. Those who are disadvantaged really are the micro, small, and medium enterprises for several reasons. One, some of them don't have a strong business case, as the case may be, issues about collateral, and several other issues that access to credit is a major for them, and that is why as a DFI, we are coming into that space. So, for example, our maximum loan size is $2 million, so that we are not crowding out funding from the small and medium, micro, small, and medium enterprises. Some of our fundings go as low as $5,000 for the micro side, okay, because that is where the main challenge is. The commercial banks compete for the big ticket transactions. We all know that. And, but the small businesses find it difficult to have assets. And that is where DBN's intervention come in. So for yours, I'll be surprised that you have several banks running after you, commercial banks, looking for such transactions, because that's what they want, really. But in real terms, several banks will run after you for such transactions. It's the smaller ones that have issues. I'm sure she will have them. Yeah. Exactly. Yes.
What's the interest rate? That is then just killing. So then it is about looking at investment in dollars, which then again, the forex
Begin to take.
So, I think if you want to grow the economy, if you want to grow the SME, then it would be interesting to find, a set of rules and regulations that actually also do that. I mean, the Bank of Industry obviously has a lower interest rate.
Yeah.
Sorry. Yeah, so I'm saying if you're really, if you're looking at supporting the SMEs, then it would be good to look at a set rules and regulations that fit that. And yes, the interest rate is of course one of them. If you want to go into dollars, it's the Forex problem that you're facing. So we all understand how Nigeria is an interesting market to operate in, and Nigeria needs a lot of investment in order to support its economy going forward with all the people. So it would be an interesting case to see how you can really support, if you understand, you know, what makes it interesting and less risky for us entrepreneurs, and that we can really grow.
Yeah, I think that's one. The pricing is one thing, right, which is rightly pointed out. Again, but sustainable financing is another major thing. There have been several interventions funds, like you know, but they've not been on a sustainable basis. And even small businesses want sustainable finance over time, all right. So you get to have subsidized interest rate, one-off, and next time you want the funds, you can have access to it. So I think those are some of the things, but DBN is coming to provide sustainable financing, and that's one of the major things we're doing. But beyond that, we also know that, like I had mentioned before, issue of tenor is also a major thing for small businesses. Most businesses, when you borrow, most climb, they give you longer tenor to be able to pay. But in Nigeria, up until recently, sometimes 6 months, you are giving 6 months, 18 months, and all that. And put so much pressure on you to be able to repay. So DBN is coming in, and we've noticed that the tenor has been elongated. Some, even microfinance banks that we've lent to, because we've been able to provide funding for them, tenors up to 5 years. So they've extended to some of their own clients to say, look, listen, and when they give such long tenors, it also affects their pricing. Sometimes the prices are lower. We've seen with the microfinance, for example, that their rates was higher, some of them as high as 5% flat, and some of them have come down because they now have sustainable financing and they're able to rely on funding coming in. So the question is, do you get some one-off intervention and it's not sustainable, or you have sustainable financing to enable you to continue to lend to them? I think that's the discussion that is ongoing in terms of that, and that's where we are coming into play. We know that we can't fulfill, we can't meet all the requirements. We're just acting as catalysts to work in. And this is where we've seen our technical assistance has come into play, for example. We find out that apart from issue of pricing, even the access to finding, some of them in Nigeria in those days, you only talk about all loans have to be collateralized. Now, we came in working with the National Collateral Registry to have movable assets to be used as collateral, and these are more beneficial for small businesses. Now we encourage that. We've taken a lot of the PFIs to the National Collateral Registry so that they can use movable assets to collateral loan for small businesses. We've, through our technical advance, innovative lending, where, for example, we encourage them to do cash flow-based lending instead of just collateral lending. These are some of the things that small businesses also face that our intervention is also trying to help. So it's from different angles. The pricing is one side, but again, tenor and also innovative financing, some of the things that we introduced. Yes, please.
Thank you. Yes, so I'm Elizabeth Wifo, and I'm a finance lawyer. And I noticed that you're looking, and one of the things you want to do is actually grow your balance sheet by growing your investments. And we do have clients who have various interests. And I wonder whether, where you have an international institution that is looking for investments in Nigeria, but is wanting to have an impact in a particular sector, for instance, energy, can you accommodate such institutions as opposed to a broad range of
Thank you very much. Now, that's a very, very interesting question, and thank you very much for bringing that up. Yes, of course, we are sector agnostic, right? So we focus every sector, but we also know that some other sectors are more impactful. And if you notice when I talk positioning the institution for green finance, for example, energy and all those areas. So there are areas we also in terms of encourage by way of partnering. As we speak, we are speaking, some of our partners are providing specific funding. Now talking to in the organization for some for green energy, some for gender, and so on and so forth, areas of interest for them. And then, of course, being a wholesale DFI, we are positioned to be able to work, because all we need to do is to work through the PFIs, the financial institutions who deal it, to be able to provide access to those specific areas that are of interest to the investors. So we're quite open to have such conversations as it were.
Okay, I think that's everybody. Any other questions? No? Okay, then that's wrapping up.
Okay, so thank you very much for your time. So for taking out the time, and thank you very much for sitting to the end. Thank you very much.